Hello, welcome. In this video, we'll be referring to some of the most important questions from economy and infrastructure, and we'll be discussing these 10. So let's get started. The first one that we have is digital lending. So let's see what's happening. You see, the Reserve Bank of India, that is the RBI's working group committee has made recommendations pertaining to digital lending. Okay, now this digital lending includes a separate legislation to prevent illegal digital lending activities. Okay, illegal digital lending activities. Basically, RBI constituted a working group on digital lending, including lending through online platforms. So please understand what's included: online platforms and also mobile apps. This panel was set up in the backdrop of business conduct and customer protection concerns arising out of the spurt in digital lending activities. Okay, now RBI basically says that digital lending or lending through the digital mode relative to physical mode is still at a nascent stage. Okay, that is, it is yet to grow. It is still at a nascent stage in the case of banks. And whereas for non-banking financial companies, a higher proportion of lending is taking place through the digital mode. So what's getting really famous when it comes to digital mode is, the lending pertaining to the non-banking financial corporations. While banks have been increasingly adopting innovative approaches in digital processes, NBFCs have been at the forefront. So remember this bit: NBFCs, that is non-banking financial companies, have been at the forefront of partnered digital lending. Okay. Now, what exactly is this digital lending? Okay, what are we talking about here? You see, digital lending, it consists of lending through web portals. Okay, lending via web portals, or we can say via web platforms or mobile apps. By taking advantage of, basically, since it's digital here, we're taking advantage of technology, and technology is used for authentication and also for credit assessment. So these are the two reasons. Okay, now what is the significance of this? So what are the positives of this? This basically leads to financial inclusion. Okay, this reduces borrowing from informal channels. You see, it helps in reducing informal borrowing as it simplifies the process of borrowing, right? So you see, in especially in the rural areas, there's a lot of informal that is borrowing done by people. So people take some small amount of money at huge interest. So it basically curbs that problem, and it also at the same time is time saving. It decreases the time spent on working loans approach in branch. Digital lending platforms have been known to cut overhead costs by 30 to 50%. So not only is it time saving, but it also, resources are also saved here. But what are the challenges now? Very quickly, challenges are that it is still at the nascent stage, and there are a growing number of unauthorized digital lending platforms and mobile applications where excessive rate of interest are charged, where there are hidden charges, they adopt unacceptable and high-handed recovery methods, and of course there is misuse agreements to access data on mobile phones of the borrowers. So these are the all concepts that you have to keep in mind, but especially remember these points. The next concept that we're dealing with is remittances. Now, what about remittances? You see, India has become the highest recipient of the remittances. So remember the country, it is India. According to the World Bank Migration and Development Brief, India has become the world's largest recipient of remittances. It has basically received, if you want a number, it is USD 87 billion. Okay, a gain of 4.6% from the previous year, that is from 2021. Okay, India is basically followed by, so the highest recipient is India, then it is China, then Mexico, Philippines, and last is Egypt. So these are the top five, right? Now, the United States being the biggest source, accounting for over 20% of all the remittances. So factors for remittances growth here are, you can use these for instance, migrants' determination to support their families in times of need. Then you can also include the point that Gulf Cooperation Council countries and Russia, the discovery of outward remittances was also facilitated by strong oil prices and resulting in the pickup in the economy or due to the working of the economy. Then there is of course COVID. You can add this point. So these are the probable reasons behind it. Now, what is the thing that you need to understand here? You have to understand that what exactly is this word remittances. You can get a question on this. You see, remittances are usually understood as financial or in-kind transfers. Okay, financial or in-kind transfers. They're basically made by migrants to friends and relatives back in communities of origin. They're basically of two main dealing with two main components. And what are they? What are they? They are personal transfer basically in cash or kind between the resident and the non-resident households, and it is compensation of employees, which basically refers to income of the workers who work in another country for a limited period of time. Now, remittances help in stimulating economic development in recipient countries, but this can also make such countries over reliant on them. Okay, just simply understand that for instance, some person is working in the USA and sends money back home in India. So this is the easiest way of understanding this. Now, what exactly is another important concept that you have to understand here is World Bank Migration and Development Brief. This is prepared by Migration and Remittances Unit, developed by the World Bank. The brief aims to provide an update on key developments in the area of migration and remittances that flow and relative policies over the months. Right now, it provides medium term projections of remittances flowing to developing countries. The brief is produced twice in a year. So these are the important points. The things that you see written on the screens are absolutely important from the exam's purpose, so especially focus on these. So this is about remittances. Remember this is India, then China, Mexico, then Philippines, and then Egypt. The next thing that we have to do is the Purvanchal Express, very important. You see, the Prime Minister inaugurated the Purvanchal Express in Uttar Pradesh. So remember the state. It starts from the Chandarsarai village, which is locating near the existing Lucknow Sultanpur Road, that is NH 731 in Lucknow district, and it ends where? It ends at Haidaria village on National Highway 31. Okay, this is in Ghazipur. This expressway is important for the simple reason that it will connect the existing Agra Lucknow and the Agra Noida Yamuna Expressway to form an industrial corridor. This will provide connectivity from the eastern to the western borders of the UP. So if this is something like UP, this is basically going to connect the eastern to the western part. So this to this is connectivity that is going to foster here. Now this, what exactly is an industrial corridor? The thing that we have written here, you see, industrial corridor is basically a corridor that consists of multimodal transport services that would pass through the state as main arteries. So the districts that follow basically in this Greenfield Expressway are very important. You can get this in the exam. So within this, there is Lucknow, there is Barabanki, there is Amethi, then Sultanpur, Ayodhya, Ambedkar Nagar, Azamgarh, Mau, and Ghazipur. So these are the important things. And also a little bit about this expressway. Why is it in news? It's for the simple reason that it will have CNG stations, electric recharge stations for vehicles, and it will also be connected with the defense corridor. Defense corridor through Agra and Bundelkhand Expressway. So Agra and Bundelkhand Expressway. So let me also discuss with you very quickly some of the benefits of this. The benefit, of course, is that this is going to give a boost to the economic development. It will result in better and quick access to bigger markets for agricultural commodities and also other products that are manufactured in the region. And also, eastern region of the state would not only be connected to Lucknow, but would also be connected to, for instance, let's say Noida right here now. Okay, so why? Because it is connecting Agra, Lucknow, and also Agra Noida Expressway. So these are the important bits. Please remember them. The next concept that we have to discuss is the concept of cryptocurrency. Very important again. You see, recently the Prime Minister of India chaired a meeting regarding the management of the cryptocurrency sector. Citing the unregulated nature of the cryptocurrency market, He called for taking progressive and forward-looking steps. So you see, at the moment, there is no legislation. There is no legislature that covers cryptocurrencies in India. Remember this point. In India, owning cryptocurrencies is still illegal. In the year 2020, the Supreme Court had struck down a ban on trading of cryptocurrency. Okay, it struck down, which was imposed by who? This ban was firstly imposed by the RBI, but it was struck down by the Supreme Court of India in the year 2020. And some of the important bits that you need to know about cryptocurrency is that China has declared all cryptocurrency transactions illegal, effectively imposing a complete ban. And on the other hand, if you have China here, you also have El Salvador, which has permitted Bitcoin as a legal tender. So you can use these two countries as an extreme opposites. This has absolutely banned, and El Salvador is treating it as a legal tender. Now, what exactly is a cryptocurrency? Cryptocurrency is basically a medium of exchange. Okay, it is created and stored electronically in the blockchain using encryption techniques to control the creation of monetary units and to verify the transfer of funds. Bitcoin is, basically the things that you need to remember about Bitcoin is, of course, you can, find the definition very easily. But what are the very important points in this definition? The point is that it firstly has no intrinsic value. Okay, what do I mean by intrinsic value? Simply that it is not redeemable for another commodity such as gold. What has intrinsic value? You can use the example of gold. Like, unlike gold, it has no intrinsic value. Then it has no physical form, and it exists only on the network, and its supply is not determined by a central bank. For instance, a legal tender is something which whose supply is basically controlled by the RBI in our country. But here, when we're talking about cryptocurrency, its supply is not determined by a central bank, and because of that, the network is completely what? It is completely decentralized. Very quickly, let's also know some of the benefits of cryptocurrency. It is basically fast and cheap. It is an investment destination. It is anti-inflammatory currency. What is exactly an anti-inflammatory currency? You can get this term in exam. You must understand that this is, the basic thing that you can understand this is through that you see, due to high demand of cryptocurrency, its prices have largely remained on a growing trajectory. Okay, in this scenario, people tend to hold more. Okay, and when people tend to hold more they're holding more cryptocurrencies and basically spending it. So this will cause a deflationary effect on the currency, right? Is this clear? So this is what inflationary currency basically means. And at the same time, let's discuss some of its concerns. What are the concerns? The concerns are basically that cryptocurrencies are extremely volatile in nature, and cryptocurrencies are used as counterproductive utility. Basically, unregulated cryptocurrency or crypto markets can become avenues for money laundering and also for terror financing. Very important point. And also, you can see also in online that you have various ads coming in by the influencers who are advertising for cryptocurrency. So the crypto market is seen as the easiest way to earn quickly profits. Due to this, there's a bombardment of advertising both online and offline to lure people into this into this market, which is extremely volatile in nature. So these are some of the issues connected with it. Have a thorough understanding of the cryptocurrencies. It's very important. The next concept that we're going to discuss, very important again, is inflation. Inflation, you see, we're not going to discuss inflation in the usual sense. We're discussing it from the point of view that US inflation also has an impact on India. You see, over the last few months, the retail inflation in USA is only rising, okay, and it was the highest year-on-year jump in 3 decades. So these rising prices have garnered a lot of attention both globally and in India. So globally is something that we're not concerned, but how with India is something that we're concerned. Before that, you must understand what exactly is inflation. Inflation is basically the rate at which prices increase over a given period of time. Typically, in India, the inflation rate is calculated on a year on year basis. Okay. And when we're talking about India's perspective, in India, inflation is primarily measured by two indices, that is the wholesale price index and the consumer price index. India has adopted a flexible inflation targeting mandate of, we have actually discussed this, you will find it on a video. This is a mandate of 4, okay? You can have a +2 and you can have a -2. So this is the range. What is the effect of inflation on people? You see, a high inflation or a high inflation rate basically erodes the purchasing power. So the effect of inflation is directly on the purchasing power. The purchasing power of people. Since the poor people have less money to withstand the fast rising prices or the increase in prices, high inflation hurts the poor people the most. However, a moderate level of inflation is absolutely required in the economy to ensure that production is promoted. Okay. Now, what are the reasons for rising inflation in USA? Because we're understanding the effect of inflation in USA on India. Okay. So the reason why it's happening in USA is because you see, there's an increase in demand, but there's a decrease in supply. Okay, this is also, you can add the point of COVID here, that demand side inflation is something that's being witnessed. And also inflation is also happening globally. So while the US has seen the sharpest increase in prices, inflation has also been witnessed in countries such as Germany, China, and also Japan. Okay, now inflation is not a problem of India that just started during the pandemic's time. If you look at the news, you'll simply understand that inflation was also a pre-pandemic phenomena. India was one of those rare major economies where inflation or high inflation predates the pandemic. So please remember this point as it is very important. Okay, what is the effect of US inflation on India? You see, inflation in USA is going to affect India in which ways? Now we're going to understand that. You see, when prices, let's understand it in very simple words. I'm saying when prices increase globally, it will lead to what? Higher imported inflation. So basically, everything that India and Indians import will become what? It will become costlier. Higher inflation in advanced economies, especially that we're taking the example of USA here, will likely force their central banks to abandon their loose monetary policy. Okay, so they will ask their bank, that is the central bank, to abandon their loose monetary policy. A tight monetary policy is something that is going to be advocated. But what exactly is a tight monetary policy? You see, a tight monetary policy in advanced countries would simply imply higher interest rates. Okay, a tight monetary policy involves increasing interest rates to constrain what? Borrowing. You see, if higher interest rates simply imply what? That borrowing is going to get expensive. Okay, that if you borrow, for instance, now you have to pay a higher interest on it. So this will basically constrain borrowing, and you see, when borrowing is something which is constrained, people are going to end up saving more. And this will affect Indian economy in two very important ways. Firstly, Indian firms that are trying to raise money outside India will find it costlier to do so. And also RBI will have to assign its monetary policy at home by raising the interest rate domestically. So the same thing that USA is doing, RBI would also have to do it in India. So I hope this is clear. This is extremely important. Have a thorough understanding of it. The next concept that we're going to do is the rising current account deficit. CAD is current account deficit. So, according to a recent report by British brokerage, that is Barclays, India's trade deficit has been continuously jumping since 2021 July. So, this widening current account deficit is driven by massive spikes in commodity prices, which is especially led by crude oil. Since we have just discussed the concept of inflation above, you can obviously link that point with rising current account deficit. You see, what exactly is a current account deficit? So, current account deficit occurs when the total value of goods and services a country imports, okay, the total value of goods and services that a country imports exceeds the total value of goods and services that the country exports. So the balance of exports and imports of goods is referred to as trade balance. And trade balance is a part of what? Trade balance is a part of current account balance. Okay, very important. This can be asked in the exam. Now, what are the factors that are responsible behind India's rising current account deficit? Again, it is high oil imports. You see, oil imports is such an important point because in India, close to 85% of the oil demand is met through the foreign world. So it is something that is met through imports. Okay, very important. Then another point could be high gold imports. Then services are also getting expensive. And the overall impact of this is that you can obviously bring in the point of inflation here, but these are the important points that you need to understand. Since we talk about balance of payment, what do we mean by balance of payment? You see, balance of payment of a country can be defined as a systematic statement of all economic transactions of a country with the rest of the world during a specific period of time. And that specific period of time is usually taken to be 1 year. Okay, so remember all these points, very important. The next is boosting services export. What do I mean by this? Recently, the Ministry of Commerce and Industry, you see the name of the ministries is very important. The Ministry of Commerce and Industry announced that it is working on a plan to reach a service export target. And what is this target? This is USD 1 trillion. And this target is to be met by 2030. This target is nearly 5 times of what India exported in the last fiscal year. Okay, what do I mean by service sector in India? What is the meaning of the service sector? You see, according to the data, India is the world's seventh largest services exporter. Right? Very important. Remember the position, it's the seventh largest. The second important point is the spread. India's service sector covers a wide variety of activities such as trade. It deals with hotels, restaurants, transport, storage, communication, financing, insurance, then of course real estate, the business services, social and personal services. All these points you can use. Okay. The point that is very important here is that you understand surplus in services trade has been long narrowed by the huge what deficit. The same deficit that we discussed above in India's merchandise shipments. This sector is boosting India's transformation from an assembly economy to a knowledge based economy, right? You can obviously bring in some of the campaigns by the government, for instance, Skill India program here, and purchasing uh, power. With Skill India program, purchasing power is something which is expected to grow. So these are all the plans, but the plan to boost the services export, how is it going to be done? The simple aim here is that we're basically going to diversify the services sector, right? There is a need to focus on promising areas, for instance, higher education, hospitality, medical tourism. So these are the examples, you can use them. And please remember this is especially by the Ministry of Commerce and Industry. This is the target, and this is to be met by 2030. The next concept that we have to discuss is India's ethanol plan and food security. India's ambitious plan to cut on the use of fossil fuels by promoting what? Ethanol, derived from rice, corn, and sugar could undermine its food security. What exactly is ethanol? Ethanol is basically an agro based product mainly produced by a byproduct of the sugar industry, namely molasses. It is one of the principal biofuels which is naturally produced by fermentation of sugars by yeast or via petrochemical processes, which is called ethyl hydration. Okay. Now, what is the problem here? The problem here is that national policy on biofuel, the new ethanol blending target primarily focuses on food-based feedstocks. In the light of grain surpluses and wide availability of technologies, this is something that we need to work upon. Then another issue here that can be used is the issue of hunger, the risk of hunger rather. The food grains which are meant for impoverished are being sold to distilleries at cheaper prices than what states pay for their public distribution networks. Okay, and then of course you can bring in some of the important, indices here. For instance, the Global Hunger Index 2020, which comprised of 107 nations, ranked India at the 94th position. Then the Food and Agriculture Organization estimates that about 200 million Indians, or about the 15% population of this country, was undernourished between the years 2018 and 2020. So you can use all these points. Then cost is an important aspect here. The production of biofuels requires land, and this impacts the cost of biofuels as well as the cost of food crops. Then water. Massive quantities of water is required for proper irrigation of biofuels crop and efficiency. Fossil fuels produce more energy than some of the biofuels. For instance, 1 gallon of ethanol produces less energy as compared to 1 gallon of fossil fuel. So these are the important points that you need to remember. This is India's ethanol plan and food security. The next concept that we have to discuss is PM Mitra Parks. So the Union Cabinet has approved the setting up of 7 mega integrated textile, region and apparel parks. What are these? These are called Mitra Parks. Okay. The estimated budget for this is 4,445 crore. These parks, what is the purpose? What is rather the aim here? The aim is basically to integrate the entire textile value chain from spinning, from weaving, from processing, dyeing, printing to garment manufacture. All of this would be now done at one location. Okay. These parks will be developed by a special purpose vehicle which will be owned by center and state. So this is going to be center and state, and along with this there will be, it will be done in a public private partnership mode. What is PPP mode? It is public private partnership mode. Each park will have an incubation center, common processing house, and a common effluent treatment plant. And other textile related facilities such as design centers, testing centers, all of those will be provided. Okay, now what is the eligibility for incentives? An additional 300 crores will also be provided as competitive incentive support, and investors who set up anchor plants. What exactly are anchor plants? Anchor plants are that where there are at least 100 people employed. Okay, so they will also be given incentives here. The significance of all of this is, what is the reason primarily why the government is doing it? So it will basically reduce or bring down logistic costs. Okay, this will generate employment. This will also attract FDI, which is foreign direct investment. Okay, these are very important. And since we're talking about PM Mitra Parks, you must also understand a little bit about the production linked incentive schemes and the National Technical Textile Mission. Technical Textile Mission has recently been launched to promote research and development in the same sector. So its focus is on research and development. And the production linked incentive scheme is something that we have taken up in the previous video, so you can look it there. But for those of you, it's very simple. For man-made fiber segment, apparel, fabrics, and 10 products of technical textiles for 5 years have been approved under the production linked incentive scheme. So these are the important things pertaining to the textile sector. The last concept that we have to discuss is the stable coins. Very important. What exactly do we mean by this? You see, USA is discussing launching a formal review into whether Tether and other stable coins threaten financial stability. The first stable coin that was created was in the year 2014, and the name is Tether. So remember, this bit can be asked in the exam. But the point here is that you have a thorough understanding of what exactly are stable coins. You see, a stable coin is a type of a cryptocurrency that is typically pegged into an existing government backed currency. So we have already discussed what cryptocurrency is above. You can refer to that. Stable coins are, a little different because they hold a bundle of assets in reserve, usually short term securities such as cash, such as government debt, and also commercial paper. Stable coins are useful because they allow people to transact more seamlessly in cryptocurrencies that function as investment and, for example, Bitcoin. Okay, they form a bridge between world old money and new world crypto, as they promise to function like perfectly safe holdings. So this is important. I hope this is clear. But what are the risks? Risks are obviously financial stability, lack of accountability. Then there's a regulatory challenge. There's an asset, risk associated, and also not all stable coins are stable in nature. That is basically saying that not all stable coins are 100% price stable. Their values are dependent on their underlying assets. Okay, so stable coins do not stand for a uniform category but represent a variety of crypto instruments that can vary significantly in legal, technical, functional, and economic terms. In order to be effective in limiting risk and not disturbing innovations, the stablecoin industry must work together with the regulators, and this is something which was presented in the reports on stablecoin. So these are all the things that you need to know, and these were our 10 concepts that we had to discuss today. I hope this was informative. Thank you for watching.